My name's Crystal, and my husband and I are the owners of First String Bookkeeping Co. Are you a business owner and you want to run a wildly successful company, but looking at the numbers makes your head spin? Well, then you've come to the right place, because our goal at First String Bookkeeping Co. is to help you feel more confident when it comes to your business's finances. We believe one of the main ways to gain that confidence is by having at least a basic understanding of how finances work, so that even if you have someone doing your books for you, you can understand the information being presented to you and make better business decisions. So let's get into it. In our first video, we talked about the first report that you should be looking at in your business, which is the income statement. So if you're not familiar with that report, I would definitely recommend going to check out that video before you continue watching this one. Today we're going to talk about the second report that you should be looking at in your business, which is the Statement of Owner's Equity, and we're going to talk about how these two reports tie together. Before we get into it, I want to define a few terms that you're going to hear me using. The first one is assets. Assets are anything of value that your company owns. So this could be actual money like cash on hand or money that you have in your checking or savings account, but it's also company vehicles, equipment, office supplies, inventory, and accounts receivable, just to name a few. The second term is equity. Equity is the rights or financial claims to the assets of your company. There are a few different people that can have claims to the assets of your company. The first and most important is the one we're going to talk about today, and that's you, the business owner. Let's say when you started your business, you put in some money and a company truck to get it going. That investment created owner's equity. And of course, any other investments that you put into your business can also increase your owner's equity. But there are other transactions that occur throughout the life of your business that can either increase or decrease your equity. For example, revenue, money coming into the business, can increase your owner's equity. And on the flip side, expenses, so money going out, will decrease your owner's equity. But there's one more type of transaction that will decrease your owner's equity, and that's withdrawals. Withdrawals happen when you, as the business owner, use business funds for personal expenses. Withdrawals aren't recorded in your books with your business expenses because they're not business expenses. They're personal. But they do need to be recorded somewhere because business funds were used. So you'll often see them in your books under owner's draws, often on your statement of owner's equity and your balance sheet, but not your income statement. So to get an accurate picture of your owner's equity, after the increases from revenue, the decreases from business expenses, and the decreases from withdrawals, we need the statement of owner's equity. The statement of owner's equity is a financial report that shows the change in owner's equity over a given period of time. You can generate this report for various accounting periods similar to the income statement, but for our example today, let's use 1 month. So it starts out by listing the beginning owner's equity as of the first of the month. Then it lists either the net profit or net loss from the income statement. If it's a net profit, then owner's equity is going to increase. But if it's a net loss, that decreases owner's equity. After that, withdrawals are listed. So now that we have our net profit or our net loss and our withdrawals, we either get an overall increase in owner's equity or an overall decrease. And finally, to get our ending equity balance for the month, the report takes the beginning equity plus the overall increase or minus the overall decrease and gives us our ending equity balance. I hope you guys found this video helpful. Please feel free to message me if you have any questions, and I hope you'll join me next week. We'll be talking about the balance sheet. See you guys then.